All right, so you want to know about hard money loans, and a lot of times people hear the word hard money, they're thinking, oh, this is something hard to get. This is something that will be a high interest rate. You know, very far from the truth. Hard money loans are actually very valuable loans for real estate investors. As a matter of fact, most real estate investors only use hard money lenders because hard money lenders close very quickly. They don't care about your credit. They don't care about your income. They care about the property. Will the property be able to provide the income necessary for this loan to be paid off? I'll give you an example. Let's say that you're buying a property that's worth $200,000 and you got it on a deal for $100,000. You'll be able to do about $20,000 of work in that property, and you will be able to lease it out in the neighborhood that will be, with the income that you're going to receive, will be sufficient to cover the loan and put a little bit of money in your pocket. The lender doesn't care. They'll do that loan all day long. So hard money loans, often we require you to put down payments that are bigger than the down payments you normally put on the home, like 5 or 10 or 20%. Hard money lender will ask you to put 35 to 40 and sometimes 50% down, depending on the property, depending on the situation. But the great thing about it is that because of the fact that you're putting a certain amount of money down, they're willing to overlook your credit issues. They're willing to overlook the condition of the property. I don't know if you know it, but most lenders would not lend on a property that say is not in a good condition, because of the laws does not allow the banks to do loans unless you pick a certain type of loans, like the FHA 223. You have to pick the right loans for you to be able to buy a property that say it's in disrepair. You cannot finance that property with just any lender. So only hard money lenders are able to do loans on this type of property. You can even get a hard money loan on a property that is not occupied, that a property that is in serious disrepair, or a property that is not finished yet. Those types of property can only be financed, for the most cases, with hard money loans. So as an investor, if you are a wannabe investor or you want to get it to become a real estate investor, you want to understand hard money loans. So the first thing, before you go talk to a hard money lender, be sure you have an exit strategy. In other words, when you get the property, what are you going to do with it? This is very important to a hard money lender, so they know how to structure the loan for your particular deal. If you're going to buy that property and you are going to rent it out, then there's a different type of loan. If you're going to buy a property and you're going to sell it right away, there's a different type of loan. So the lender wants to know that. Now, sometimes the hard money lender, they do something called a bridge. A bridge loan is simply giving you the ability to say, you want to buy something and it's a quick deal. If you say it's a commercial real estate property, most of the time these deals take 60 or 90 days to close. But a hard money lender can close on that deal for 30 days. Now, if you have a seller who needs the money right away and wants to go do something, whatever the case is, if you go to a bank, you're not going to be able to buy that property. It's going to take too long. So the seller wants to sell to someone who's going to close quick. You hear this term, people say, oh, we're going to close cash in 30 days, no contingencies. All they're talking about, they're going to get the money from a hard money lender, because all loans are closed with cash. The cash is sent to the bank. And so this is what you hear people say, oh, we're going to close cash in 30 days. They're going to get the money from a hard money lender, is going to send it to escrow or title company. They're going to close on the deal and you're going to own the property. Now, I was talking about a commercial real estate property. Let's say that you are able to buy a commercial real estate property on a very special deal because the seller is in a rush for whatever reason. You buy it and that property, say, is worth double what you bought it for. Now you can go to a bank after you got a hard money loan, acquire the property. You now have time to go to a bank to get a better, maybe better rates on the property, or maybe get, whatever you need to get from the lender for you to now turn this real estate, make it profitable. But you need what they call a bridge loan to do that. Okay, so another form of a hard money loan or a private loan could be something called a mezzanine loan. So a mezzanine loan is a loan that is actually not given to a property, but it's a loan given to the entity that owns the property. But that's more for more sophisticated real estate investors. We can talk more about that in the future, but I want you to understand hard money loans are very, very, very profitable. They allow you to get access to deals very quickly, to be able to acquire the property and turn it around regardless of the situation. Your credit does not matter. The property is the assets. The hard money lenders are in essence what you call asset-based lenders. They are more concerned about the property, the value of the property, and how much you're buying it for. So a hard money lender, for example, is not going to do 100% financing. Special situations, but for the most part, they want you to put that 35, 40, or 50% of money down. In some cases, you can get away with 25, but you want to keep that in mind. If you want to get started in real estate investing and you're thinking, oh, I don't have any income, I don't have any credit. Well, listen, all you have to do is find the right property. The down payment can come from a partner. So let's say I want to buy, I'll find a good deal, a property worth $1 million being sold for $600,000. And a hard money lender is asking me to bring, say, $200,000 down. I can find a partner, somebody who has the $200,000, partner with me, put the money down, we'll buy the property. When we sell it for $1 million, I give my partner $200,000, I keep $200,000, and I move on. In this case, we both profited, and this person now loves me. On my next deal, I'll call upon him again. You don't need money to get started, because in a hard money loan, your income does not matter and your credit doesn't matter. It's the property. So those are the great benefits of hard money loans. Let's talk hard money. If you have questions, look in the description, click on the link in the description, and most importantly, if you like what I'm talking about, please make sure you like this video and you comment, share it with your friends, subscribe, and hit that notification button. So next time, I want you to get the notification so you can join me. All right? Until next time, I'm Marcus Mavacala. I'll see you next time. Bye now.